Hey guys, so in this video I'm going to show you a quick tutorial on how you can manually set up a stop loss or a stop limit on your option contracts here in ThinkorSwim, right? So we want to set a manual stop loss in the event that we purchase a contract, a option contract, we enter a trade, and we have predetermined that we don't want to lose more than 10%. Or let's say we don't want to lose a specific dollar amount. We don't want to lose more than a specific dollar amount. So let's say we don't want to lose more than $100. So we can set a manual stop loss to automatically get out of those contracts or sell those contracts once we reach a value, a dollar amount or a percentage amount that we're not comfortable with losing more than. Alright, so that's the purpose of a manual stop loss. We also have a manual stop limit, which is the opposite. So it's basically once we've made a certain amount of profit, whether it's a percentage amount or a dollar amount, we want to automatically sell our contracts to take those profits. Alright, so a stop limit or a stop loss allows you to basically cut your losses before it gets too damaging, and a stop limit allows you to take profits before you lose those profits based on price action in the market. Alright. Now, just a word of caution. So, if you have a stop loss, depending on how fast the price action is fluctuating, you might enter a trade and like within a minute, the trader reaches your stop loss, and it will automatically send and get you out. It will automatically sell and get you out of those positions. And then in the next instant, the price action can quickly change, right? And then let's say you had a target to make $100 today. The price action can change quickly and actually hit that $100 after you've sold automatically with your stop limit, right? So you would have actually lost money when you could have profited. So just bear that in mind. You don't really want to use a stop limit when the market is volatile and the price action is changing quickly. Alright? Well, did I say stop limit? You don't want to use a stop loss when the market is changing quickly. And the same can be said for stop limit, but you're making profits if you sell at a profit, right? So it doesn't really, it's not as bad, but you could like be patient and make more money later on if the price goes in your favor. But at any rate, a stop limit would allow you to take some profits. Alright, so we just want to bear those things in mind. So in ThinkorSwim, this is how I like to do my stop limits or my stop losses, right? So I like to come over to the trades tab, and I want to go to the flexible grid, and then I'll customize my flexible grid. Now, if you don't know how to set up your flexible grid, or you want to see how I set up my flexible grid, you can let me know in the comment section, and I will make a tutorial video to show you how you can do so, alright? Or how I do it. So this is my flexible grid. I have one chart here that is linked up to my active trader. So you see it's linked here to the yellow, and this is yellow. So whatever ticker or contract that I load into this active trader, it will show here on the chart, right? And vice versa. So I have one active trader here. I use this one for my calls, I use this one for my puts, and I use this one for something else. So I can show you more about my ideology behind setting up my stuff like this, but that's not really important right now. So there are many different ways that you can load your contracts into your active trader, but I just like to go to trade. I like to search up my ticker. So let's say we're going to go for Apple today, and let's say we want to purchase next week contracts, and we want to go for out of the money call options, right? So let's say I want to go for this call option because it has a lot of liquidity or a lot of volume here and a lot of open interest. Or maybe I'd go for this one because it has the highest volume. This one has a high open interest as well, but it has the highest volume, and I like volume. So let's say I want to go for this call option. I want to go ahead and right click, and then I want to copy, or you can actually send it to whatever active trader you want by clicking here. So I can just click send to the yellow, and it will automatically load into my yellow active trader, and we can go back to the charts and the flexible grid, and the contract here is already loaded. So we can see we have the Apple contracts here. You can see APL, that's the name of the ticker, and we can see we have the C225, that's the call option that we're trying to purchase here. Now I have on my auto send, so if I click buy axe or buy market, I will automatically get this position filled, alright, and automatically get the position sold if I click sell market or sell bid as well, right? So we see that this contract here is, or this call option here is for $2 and, well, 2.42, multiply that by 100, so that's $242, and we have one quantity. So we're gonna go ahead and purchase this contract, right? But first we want to set a stop limit on this order. Well, not a stop limit, yeah, well, we do want to set a stop limit and a stop loss. So if it reaches our stop limit, we'll take some profits automatically, and if it reaches our stop loss, we'll just cut our losses and just call it a day. So to do this, we want to go here where it says template. We want to click on the single option here, and we want to change this to trigger with brackets. We want to click on the first one. Now what this allows us to do is set our stop loss and our stop limits. We can unclick this, for example, if we don't want to have a stop limit. So we want this to go on infinitely until we want to come in and manually sell our positions, right? Or we can unclick this if we don't want to have a stop loss. Now here we have quantity, right? So this predetermines the amount of our contracts that we want to sell once our stop loss or our stop limits are met. So we can just change the quantity by here. So let's say we want to sell 5-6 positions once we've reached our predetermined stop losses or stop limits, right? So we can do that there. And then we have offset. So this is the predetermined amount that we're saying, okay, if I lose this amount, I want to sell my positions and get out of this position right away. Or if I gain this amount, I want to sell this position and take my profits. So this can be a dollar value or a percentage value. And there's another thing here. I believe this is reflective of the okay, let's ignore this one because I'm not sure how to put this in words, but we want to focus here on a dollar amount or percentage amount. So we can just click this little bar here, and it will change to a dollar amount or percentage amount, and we can choose whatever we want. So personally, I like percentage amounts. So for my limit, I'm going to say sell this position if I make 20% profits. And for my stop loss, I'm going to say sell this position if I lose 10% on my contract, right? So if my contract goes up by 20% in value, I'm going to sell, automatically take those profits. If my contracts go down 10% in value, I'm going to sell and call it a day and accept my losses, right? Now, this is the limit, as I said, and this is the stop loss, right? We can also have a trail stop. So a trail stop is a little bit different from a stop loss. So a trail stop is basically, let's say you got into an option contract, you got into a trade, and the trade is going in your favor. So let's say you're up 20%, but you don't want to sell as yet. So you don't have a stop limit in place. So you don't want to sell. You want to see if the contract is going to keep going into your favor, right? So what you're going to do is that you're going to set a trailing stop. So if it goes up to like 30% and then retraces like 10%, you're going to want to sell. You're going to want to sell there at 10%. So you don't want the profits that you made to all be wiped out and come back down to zero or go negative. So you just go ahead, once it goes up to 30%, if it comes back down to 10%, so it's going to be at 20%, now you're going to automatically sell it at 20%, right? So that's what a trailing stop is. And it basically allows you to have a stop loss after you've gained a certain amount of profits, right? So that's what a trailing stop is. So you can change this to a trailing stop if you want to experiment with that. Now we have this section here where we can basically determine if we're using these templates here for the day. So if we're day trading or if we're doing like a swing trade or a league trade. So we can select day here, or we can select good till close. So this will continue until whenever your contracts expire or whenever you feel comfortable. Alright, so I like to keep mine at day because I'm day trading mostly, and we can also save this template as well. So I'm gonna actually go and save this. I'm gonna call this stop limit and loss 1. Okay, and let's save that, and we're good to go. Okay, so let's take a look at what this would kind of look like if we should purchase this contract, right? Or this option, calls option, right? So we want to purchase here, for example, at 242 for the price, and we want to buy, let's say we want to buy the ask here. So this is what our trailing stop or our stop loss will be. So it's going to automatically sell once the price falls to $2.41, as you can see here, and it's going to automatically sell once it gets to $2.51, which will be 20% in profit, right? If we did another option, like let's say, let me just change this. You can change the value of your contracts. Let's say you want to change this to the 230 calls. You can just click, you can just delete that part of the number and then just manually enter it there, and it will load up for you, right? So this is the parts of the 230 calls, and we can see that the stop loss and the stop limit values will change. So we purchase the 230 calls here for this auto contract at $1 and $104 for this one contract. We're going to see that the stop loss is going to sell automatically if the price falls down to 0.98, and you're going to automatically sell at a profit if it goes to 1.07, right? So that's basically how you can set up a stop loss and a stop limit. I hope this tutorial was clear. If you have any questions, if anything was confusing, you can definitely let me know, and I will try to respond in the comment section. Or if you have anything specific that you'd like for me to cover, I'll create a tutorial for you and I'll get that done. Alright, thank you so much for watching. Please like, share, and subscribe, and do leave a comment, right? I would appreciate that, and I hope that I have been of value to you today. And do have yourself a wonderful day, and profitable trading to you for the week ahead. Cheers.